Pooja, thank you so much for joining us here at SuperInvestor. You've been investing in this area for many years, since 2005, I believe.
Yes.
So what are you seeing now compared to what you saw nearly 20 years ago in terms of interest in climate and proper investment in this area?
Well, first of all, thank you for having me. This is a fantastic conference, and Europe is just an incredibly important market for us, and I'll come back to that as we talk more about what we've been up to at Carlyle. But look, the industry has evolved quite a bit over the last 20 years. In the beginning, when you were investing in renewables, it really was an industry that was heavily reliant on government subsidies because it was just simply too expensive to produce renewable energy compared to conventional forms of energy or carbon-intensive forms of energy. Fast forward to today, there has been significant investment in manufacturing capacity, and the cost to produce renewable energy is really quite cost competitive when compared to conventional forms of energy, even on a subsidy-free basis in several markets. So that just changes the fundamentals of investing in renewables now. You have an industry that can be theoretically subsidy-free, as well as an industry that has access to capital markets that understand the risk around investing in renewables, both on the equity side as well as the credit side. So that's just made the sector a lot more investable today compared to where it was 20 years back.
And I guess a huge shift in terms of perception of this area and how important it is in society as well.
Absolutely. I mean, listen, climate change has been front and center for the last 5 years or so. And then at the start of the year, with the geopolitical dynamics going on right now and the war in Ukraine, the focus very much has also been on energy security. And so that's just added a certain level of urgency on investing in the energy transition, where, it's also from a climate change perspective as well as energy security perspective. So investing in the energy transition is a win-win on both of those driving factors. Now, having said that, we always have to recognize that we're investing in a transition. This is not a revolution, as I like to say. You cannot simply flip a switch and go green all of a sudden tomorrow. And this is where, both on the public as well as private side, there needs to be understanding that this thesis is going to play out over the next several decades. It's going to require a very thoughtful approach to transitioning away from carbon-intensive fuels.
With all of that in mind, where would you say the most exciting opportunities lie at the moment?
Look, our opportunity set is quite rich right now. So we obviously invest in wind and solar, your conventional renewable sources of energy. But we also see a lot of opportunity around batteries and storage solutions, primarily because we're bridging the gap between the intermittent nature of renewables like the sun and the wind, as well as a gap in terms of how much capital has gone into upgrading your transmission infrastructure. So we see a lot of opportunity around batteries and storage solutions. There's a lot of opportunity around electric vehicles and charging infrastructure. But given the war in Ukraine, we're also beginning to see a lot of opportunity in energy transition more broadly. For example, we did invest in a company in the summer of this year in the green ammonia space. And so this company develops green ammonia projects in the Western Hemisphere. And most of the ammonia today in the world is actually manufactured in Ukraine, in Russia, China, as well as the US. So you can see where I'm going with that investment thesis. All of a sudden investing in ammonia has become cost competitive, and there's a real demand for green ammonia being manufactured in the or being created in the Western Hemisphere.
So some really interesting opportunities, and I guess the pressure on this industry to be playing its part is greater than ever. It's really what could and should private equity be doing to play a role in this, isn't it?
And look, this is where we need to be a little careful, because you don't want capital to blow hot or cold because of a certain market dynamic right now. And that is where, candidly, if you go back to the start of investing in renewables in the early 2000s, remember there was the clean tech bubble burst. Then after that, you had the great financial crisis, austerity measures. And that did have an impact on the growth trajectory of the renewables and energy transition space. So we all need to be realistic about how we want to invest in the transition so that investors are not disappointed. I do believe that private capital is best suited to invest in the energy transition. We have the ability to be patient, to provide our portfolio companies the right level of support and access that they need in order to make their best thoughtful decisions over a certain period of time versus being beholden to public market reporting on a quarterly basis. So I do think private capital is best suited to do this, but there also needs to be a realization that these are theses that will play out over a certain period of time.
You mentioned the portfolio companies there. It really is key that the investors are supporting those companies that are trying to do these new things, isn't it?
Absolutely. We just announced the launch of a pan-European development platform, in fact, yesterday. It's called Telis Energy. This is a platform we have built from scratch to develop renewable energy projects in Europe. Europe is a very important market strategically for the energy transition for all the reasons that I mentioned to you. And this company is going to be developing projects in France, UK, Germany, Spain, and Italy. Now, developing renewable energy projects requires a certain amount of expertise. You need to understand the nuances around developing these projects in those different regions, and every region is different, requires a certain amount of local expertise. You need to think about supply chain issues to make sure that there's the right equipment that is available for these projects when they're ready to be built. You need to think about the right capital structure as well as the right strategy to sell your energy to corporate customers or maybe local utilities on a long-term basis. This is where we can provide a lot of support to our portfolio companies, and we work hand in hand with our management teams to make that happen.
Yes, I mean, it's a longevity of expertise that you have, and it brings with it resilience for these companies, doesn't it?
It's a lot of experience. There's pattern recognition. You know exactly what you need to do in order to be able to withstand market disruptions. And market disruptions can be rising cost of capital, or it can be supply chain issues, or it can be commodity price fluctuations, or it could be all of the above. And so just having that experience is incredibly important. And I think it's an important driver even for the management teams that we're partnering up with. You have to invest the time and effort to originate these deals over several years. They don't just come to you when they're seeking capital, and they want to see that you are someone who has that experience and is also committed, your own professional career to the sector in the long run.
Has the track record. There's 1,300 members of your profession here at this event. It's a great opportunity to get messages across. What would you hope would be a key takeaway if somebody had a chat to you this week?
I would say that be extremely thoughtful about investing in the energy transition. Really think hard and deliberately, do your due diligence. And I do believe that the market conditions are offering the opportunity for you to take your time and do your due diligence and price these transactions in a thoughtful way. I get extremely concerned about momentum investing, greenwashing, especially in this sector. And I think that harms not only for the investors that are investing capital in this space or the asset managers who might be investing on their behalf, but it also harms the portfolio companies as well as the long-term viability of a sector. So I'm a complete believer in the sector. I've committed my career to it, and I just want people to approach investing in the sector in a very thoughtful, deliberate manner.
Pooja, it's great to hear your passion in the area. Thank you so much for sharing it with us today.
Thank you for having me.